Apple had its biggest event of the year, then dropped 2%. Intel ripped 11% on a Google chip deal. Pain trade lower. Tech is leaking while energy holds. Stick around, it all points to one defensive trade. The 30-year yield just broke above 5%, a level that makes expensive growth stocks look even pricier. Intel just landed a massive chip contract, supplying over 3 million AI processors to Google through 2028. Intel surged more than 11%. Inflation data this week could break above 4%, and the bond market is already demanding the Fed respond harder. SpaceX is targeting an IPO on June 12th at a valuation of $1.77 trillion. Apple fell nearly 2.5%. The WWDC reveal was widely expected, so traders sold the news once it landed. Coinbase jumped over 6% alongside a crypto rebound. Healthcare and energy are the only two sectors leading this week. Everything else is bleeding. Off-exchange large trades told a clear story today. Big money was quietly selling SPY, QQQ, and IWM all at once. The only sector they leaned into buying was financials. Someone spent over $400 million today buying same-day puts on SPY, right near the current price. QQQ's picture is even more stretched. The put wall sits 2% below spot and max pain is over 3% lower. Apple's options volume spiked way above its own recent average, and the flow was bearish. Energy ETF XLE, bullish, 100% sector breadth. Middle East tension supporting oil, 5-day outperformance confirmed. Healthcare ETF XLV, defensive long. Rising yields favor defensives. Eli Lilly GLP-1 trial win adds a real catalyst. Here's the read. 30-year yields broke 5%. The options market spent over $400 million on same-day downside insurance. And big block trades show institutions selling tech and healthcare while only leaning into financials and energy. All three point the same way. Pain trade lower with defensive sectors as the only shelter. That's today's print. This is Lidar. See what they see. Trade your own thesis. See you next time.